Friends, today we shall discuss the export costing and price offer. We welcome to this project of learning export and import trade. Enjoy learning. Thanks. Export pricing and costing are two different things, and an exporter should not confuse between the two. Price is what an exporter offers to a customer on particular products, while cost is what an exporter pay for manufacturing the same product. Export pricing is the most important factor for promoting the export and facing international trade competition. It is important for the exporter to keep the prices down, keeping in mind that all export benefits and expenses are available. However, there is no fixed formula for a successful export pricing, and it differs from exporter to exporter depending upon whether the exporter is a merchant exporter or a manufacturer exporter or exporting through an agency. Determining the export pricing. Export pricing can be determined by the following factors: range of products offered, prompt deliveries and continuity in supply, after sales services in products like machine tools, consumer durables, product differentiation and brand image, frequency of purchase, presumed relationship between quality and price, specialty, value goods and gift items, credit offered, preference or prejudice for products originating from a particular source, aggressive marketing and sales promotion, prompt acceptance and settlement of claims, unique value goods and gift items. Export costing. Export costing is basically cost accountant's job. It consists of fixed cost and variable cost comprising various elements. It is advisable to prepare an export costing sheet for every export product. As regards quoting the prices for the overseas buyer, the same are quoted by following the internationally accepted terms which are commonly known as Incoterms. Costing for export. There are many costs included in an export transaction which are not applicable to domestic sales. It is recommended that a costing sheet is prepared to ensure that all costs items relevant to the export transactions are itemized and included. This will ensure that a correct quotation can be prepared accurately and quickly. Generally, export costings should include the manufacturing cost and any addition or modification to products, special packaging, ingredients, formula or specification modification, quality control, export administration, freight, distribution and marketing. Special costs applicable to particular industries should not be overlooked. In addition, cost of premiums for credit risk insurance, foreign exchange risk, loss of interest when providing credit terms, bank charges, agents' commissions, bid and performance bond, and other bank guarantees may have to be taken into consideration when preparing a quotation. We repeat that export costing should not be confused with pricing. The following definitions indicate the differences. Export costs are total of all expenses associated with producing and selling a product overseas. Price is the amount for which exporter sells the product and is determined by the exporter's marketing strategy. Margin is the difference between the total cost per unit and the export selling price and is determined by exporters' corporate objectives. Costs associated especially with export documentation, transport, and insurance includes the following: customs clearance, that is obtaining the IEN export code number issued by DGFT and any other export permit or license from regulatory authorities DGFT. Certification, legalization, certification, legalization of documents and preparation cost. For example, State Chamber of Commerce, embassies, company staff cost, courier, etc. Inspection costs of arranging and supervising the inspection of goods if required. Whether the exporter or importer is responsible for the payment of inspection fees, this should be established when preparing the quote. Cartage. To wharf. Wharf is a pier where ships or boats are tied up and loaded and unloaded. Or airport. Delivery by road to the container depot or airport. For example, cost of inland haulage by a contractor or cost of exporters' own transport. Packing or labor costs. It is exporter's responsibility to include export packaging as part of the export price. However, on some occasions, special packing requirements are prescribed by the importer. In this case, the additional costs incurred may be added to the pricing structure. THC, Terminal Handling Charge, Port Service Charge. These charges are paid to the port authorities for use of their facilities. They are normally included in the freight rate charged by the shipping company and paid to the shipper's behalf to the port authorities. Occasionally, for chartered vessels, etc., the charges will have to be paid direct to the port authority by the shipper. Sea or air freight. Cost obtained from shipping company, airline or consolidator. Also an allowance for contingencies is recommended. This is to allow for possible rate increases, adjustment to the bunker adjustment factor BAF, currency adjustment factor CAF, percentages or other unforeseen circumstances. Marine insurance premium. Cost obtained from insurance company or broker. Incoterms. International commercial terms. The set of international rules for the interpretation of trade terms was first published by International Chamber of Commerce ICC in 1936 with amendments and additions following in 1953, 1967, 1976, 1980, 1990, 2000 and 2010. The latest is 2010 edition, prepared to take account of the changes in international trade practices and transportation techniques which occurred in the last 2 decades. A key point that has been flagged by the ICC is that use of the traditional terms of FOB, CFR and CIF should be limited to bulk and break bulk cargo shipments and not be used for container shipments. For full explanation of these and other terms, it is suggested that a copy of Incoterms 2010 is obtained. This can be bought or available on internet. The Incoterms rules are an internationally recognized standard and are used worldwide in international and domestic contracts for the sale of goods. First published in 1936, Incoterms rules provide internationally accepted definitions and rules of interpretation for most common commercial terms. The rules have been developed and maintained by the experts and practitioners brought together by ICC and have become the standard in international business rules setting. We repeat, these are launched in mid September 2010. Incoterms 2010 came into effect on 1st January 2011. They help traders to avoid costly misunderstandings by clarifying the tasks, costs, and risks involved in the delivery of the goods from seller to the buyers. Incoterms rules are recognized by UNCITRAL, United Nations Commission on International Trade Laws, as global standard for interpretation of most common terms in foreign trade. It is important, however, to specify the chosen version of Incoterms 2010 or Incoterms 2000 or any earlier version. The Incoterms are most important and it requires to be discussed in detail. The importance further increases as these terms are used in documentary letter of credit. Thanks.